and on the basis. So, good morning, student. I have decided to discuss a very unique topic today, that source of public revenue, and in what way through the taxation the government, because the government is having right to have a tax on the public for completion of the several public related issues, public interest issues, and also to secure the country from the internal and external threats. So for that, the government is responsible for collecting the revenue. And regarding this thing, the government is also liable to collect the things those who are very important as far as the interest of country is concerned. So in this topic, I have decided to discuss a very unique things, that in what way the government collect the tax from the public, either there's a direct tax, indirect tax, or so the others way of taxation. That we'll discuss, that how the state is earning their livelihood, and how they can ensure the equal development and growth of the entire society and as a country, so that revenue to be utilized for the development and growth of the country. So in this topic, we'll have a very good discussion on. I have decided to discuss a very unique thing, that is very important. To come also. So today we will discuss the concept, terms, and methods of measuring the national income. Regarding the same, I have discussed little bit in the past. So let us come to the objective first. That what we learn out of the discussion on this particular national income. So we'll after discussion we'll have better understanding regarding the meaning and concept of the national income. Then the different terms used in the measuring. And then so without taking much time, I'll go on the concept of a national or to make activity economy. And I main formulate decision making and in national economic vision. These three things or have a assessment of policy helps in comparing as of the past from the past the growth rates in this. It means through national can have a little bit idea the stuff we are having in the basis forecast for coming that is particular used for makers. So listen, GDP group like which like has a percent
सर उसका
GDP
ज्वाइन नहीं हो रहा है.
national income we can have.
कैसे सर?
हाँ मैं भी करा रहा हूँ बेटा.
ओके सर.
Loss or that's why we have this. And wait, then we'll have discussion. नेट का प्रॉब्लम हो रहा है, लैपटॉप में नेट की कनेक्टिविटी प्रॉपर नहीं है. अभी भी नेटवर्क प्रॉब्लम चल रहा है, ये लैपटॉप कनेक्शन तो इन कनेक्टिविटी पूरी दैट्स लाइक दैट। You just wait if the connection will stable, otherwise we don't have any option.
Good morning, sir.
नेट का प्रॉब्लम है, अभी मैं स्टेबल कर रहा हूँ इसको, है ना। we'll have a discussion on
Okay.
वेट करना पड़ेगा बेटा, ये अनस्टेबल हो रहा है नेट बार बार। ठीक है। एक बार और हो जाए कनेक्शन। So now it's, I think, Aditya, now I'm giving you all to entry, and once again we'll start because now I think the network is in proper shape. Cool. So once again, I'll start this discussion that which I have started for for discussing the national income. So learning objective I have already discussed that what after the discuss we'll have a and a better understanding about the meaning and concept of the national income. Then what are the different terms those who are being used to measuring the national income? We'll have understanding about them. Then the methods of measuring the national income. So these are the learning outcomes after the completion of this lecture. So let us have a first the let us come on the point that concept of national income accounting. This is a very important aspect that national income accounting is a method of technique used to measure the economic activity in the national economy as a whole. So this is a parameter actually which is generally being used by the financial institution of a country that what is going on economic front in the country and what kind of the activity they are supposed to decide in coming years or incoming future as far as the policy formulation is concerned. So why we decide this NIA or national income accounting that for policy formulation, for effective decision making, and for international economic comparison. So these are the three things for that we'll have a we'll have assessment or measurement of the national income. So first, let us have a discussion on policy formulation. It helps in comparing the estimate of past from the future and also forecast the growth rates in future. Actually, this national income is through this we can have a comparison within the country, in within the states, or within at world as a large at large. So this national income is very much required for policy formulation, and on the basis of that national income, we can have the forecast for future growth which we decide and which we design that for the country or for the world or for individual as a whole. And for example, that you know that if the country has GDP of rupees 103 lakh, for example, we have about 20 lakh rupees GDP right now, and we have a plan in coming 5 years we'll have a GDP of 5 lakh million rupees. So this is the thing actually that it means the 3 lakh rupees is higher than the last year, so it has a growth of 3%. It means the GDP is 3%. This is the example which we have a better give the better understanding regarding the policy formulation. Then the effective decision making to estimate the contribution of each of the sectors of the economy. It helps the business to plan for production. It means on the basis of the growth or on the basis of the national income or on the basis of the GDP, we can plan that what kind of that policy, what kind of the decision those are being required to uplift the income of the society. We can have this on the basis of the data. We can decide that what kind of decisions are required to be taken to ensure the growth which we have decided for the country or as an individual as a whole. Then the third one, international economic comparison. On the basis of that GDP, we can compare the country, the status of the country, that whether it is developing, underdeveloped, or developed country. So on the basis of that, the growth, the pace of growth, that the GDP, what kind of GDP they are having. On the basis of that, we can have little bit idea about the country and about its prosperity. So these are the things, the three things. That's why we require the estimation or the accounting of the national income. Then the terms with measuring of national income, we'll have a little bit discussion on that. For example, the gross domestic GDP. This is general things that we in day-to-day discussion we have to understand what is the meaning of GDP. Gross domestic product, the total value of all final goods and services produced within the country, within the boundary of a country during a given period of time. Generally, it is 1 year, is called GDP. It means whatever the product and the services those who are produced within the boundary of a nation, within the boundary of a country, to whom we are calling the GDP, total gross domestic product. In case the final produce of residents, citizens, as well as the foreign nationals who reside within the geographical boundary is considered. It means here we are also considering the contribution of the foreign national, those who are resident, those who are the residents inside the country. we will contribute their we add their contribution also in the GDP. Whatever the services and goods those they are producing, we are accounting them into the national income, and we are calling it the GDP. Then there is a second term which is generally being used, the gross national product (GNP), is the total value of the total production of final goods and services produced by the national of a country during a given period of time, generally 1 year. In this case, the income of all the resident and non-resident citizens of the country who reside in abroad of the country is included. The income of foreigners who resides within India is excluded. But here the people of the other nationals, those who are producing their income in the within the range of the country, we are not including that income in the or the value of their contribution in the gross national product. This is the difference between in GDP we include whatever the people, either they are foreign nature of foreign national, if they are within the radius within the geographical area of the country, whatever the production or whatever the product they produce and the services those they are being provided, we include all the income generated by them. But here in the case of gross national income, we are excluding the foreigners, those who are in the country, if they're generating any income through producing a product or service, we are not including that income. So this is the difference between the GDP and the gross GNP. Net national income, net national income is nothing. It is just GNP minus depreciation. If we reduce the depreciation from the GNP, then to whom we are calling the net national income, net national product. It is calculated by subtracting depreciation from the gross national product. Depreciation minus wear and tear of goods produced. This deduction is done because a part of current produce goes to replace the depreciate part of the product already produced. This part does not add value of to the current year total produce. It is used to keep the product already produced intact, and hence it is deducted. So all the depreciation we deduct from the GNP, and then to whom we are calling the net national product (NNP). Then we have a net domestic product. Just like gross domestic product, we have a net domestic product. So net domestic product is equal to GDP minus depreciation. Here we subtract the depreciation from the GDP. It is the calculated GDP after adjusting the value of depreciation. This is basically net from the GDP. In example, the GDP minus total value of wear and tear, national net national net domestic product of an economy is always lower than the GDP. Since because we from GDP we reduce the depreciation, that's why its amount is definitely less than the GDP. Since their depreciation can never be reduced to zero, the concept of national net domestic product and MNP are not used to compare different economies, because the method of calculating depreciation varies from country to country. That's why only the GDP and the gross national product we do, these are the two parameters on the basis of that we have comparison within the countries, because they otherwise depreciation, the amount of depreciation being varied from country to country. That's why we are using only the GDP and GNP. These are the two parameters for comparing the country's economy. Then the disposal of personal income. Then the disposable of personal income. It is amount left individual after paying personal taxes as income tax, property tax, professional tax, etc., to spend as they like. Disposable personal income is nothing. It is just equal to personal income minus taxes. Minus taxes. If we reduce the taxes, whatever the taxes they are supposed to pay, then whatever the amount is left in the kitty of the individuals or in the kitty of the in the firms, to whom we are calling the disposable personal income, because that income, that earning, they can spend as per their wish. This concept is very useful for studying the understanding the consumption and saving behavior of the individuals. Now we will have a method of measuring national income. Now the first one is income method. On the basis of that, we can have that whatever the earnings of individual or the farm or country will have assessment based on that, which adds the all incomes received by the factors of production generated in the economy during the year. This includes the wages from employment and self-employment, profits to farms, interest to lenders of capitals, and rent to the owners of the land. Thus, under this method, national income is obtained by summing up all the incomes of all individual of the country. This method of estimating national income has the great advantage of indicating the distribution of national income among different income groups such as landlords, owners, capitals, workers, laborers, etc., etc. So this is a very good parameter because here we are adding and summing all the income of all the groups, all the societies, and then we'll have a final national income. Then the second one, the output method, value added method, which is the combined value of new and final output outproduced in all sectors of the economy, including manufacturing, financial services, transport, sorry, transport and agriculture. In this method, the value added by each enterprise in the production of goods and services is measured. It means here whatever the contribution of each enterprise is in the production of income, we are having we are adding this value. The value added by an enterprise is obtained by deducting expenditure incurred on intermediate goods such as raw material, unfinished goods purchased from other firms from value of output produced by enterprises. The output approach focus on finding the total output of a nation by directly finding the total value of all goods and services a nation produces. It means whatever the product and services being produced by a nation or group of firms, those who are operating within the nation, we are adding the value, and then we finally we are calculating the national income. Because of complications of the multiple stages in the production of a good or service, only the final value of goods or service is included in the total output. This avoid an issue often called double counting. Because if we only add the values, whatever the values they produce in the process, we add them because otherwise the double counting is creating a confusion over there. Wherein in the total value of a good is included. Whatever the value of the finished the goods which is there, we are adding that. By counting it repeatedly in the several stages. So to avoid that the repeating of the value time and again, we are adopting this process. Then there is a third parameter that how we calculate the expenditure method. This is very important that how we calculate on the which adds all the spending in the economy by household and farm on the new or final goods and services. Expenditure approach is basically an output accounting method. It focuses on finding the total output of a nation by finding the total amount of money spent. It means whatever the output or the amount actually the group of sectors of the society they are spending, we are adding them, and on the basis of that we are calculating the national income. This is acceptable to economics because this income, the total value of all goods is equal to the total amount of money spent on goods. The basic concept of domestic output take all different area is which money is spent in the region and then combines them to find the total output where the C is equal to household consumption, expenditure, etc., etc., personal expenditure, etc. Then the I, gross private domestic investment. Then G, government consumption and gross investment expenditure. Then X, gross export of goods and services. Then M, gross import of goods and services. So all we are over there. The note X minus M is often written X and or less. This is the formula actually through which we are assessing all the things, and then we are calculating them, we are adding them, and finally we'll have a national income. Difficulties in measuring the national income. What are the hurdles they are there while we are measuring the national income. The measurement of national income is a complicated problem, and it is best with the following difficulties. Non-availability of statistical material. Actually, the some persons like electrician, plumbers, etc., who some job is there, spares time and receive income. The state find is very difficult to know the exact amount received from such services. This income, which should have been added to the national income, is not recorded due to the lack of full information of the statistical material. Because there are these are the two examples. Otherwise, we have plenty of examples that we are helpless. We are not questioned to calculate their earnings. So that is why we are not able to find out the exact national income of the country. The danger of double counting. This is also one of the very big issue. While computing the national income, there is always a danger of double or multiple counting. In if care is not taken in estimating the income, the cost of commodity is likely to be counted twice, thrice, or more than that. Sometimes the national income will be overestimated. Then the non-market services. These are also very big issue that in estimating the national income, only those services are included for which the payment is made. The unpaid services or non-marketed services are excluded from the national income. Difficulty in assessing the difficulty in assessing the national income is not easy task. It requires high degree of judgment to assess the depreciation allowances and other charges. Then housing. A person live in a rented house, he pays whatever the amount is there to the landlord. The income of the landlord recorded on in the national income. Let us suppose that the tenant purchased the same house from the landlord. Now the income of the owner occupant has increases in the same amount. It is not justifiable to include this income in the national income. Should or should not this income has to be recorded in the national income is still a controversial question. Then the transfer earnings. While the measuring the national income, it should seem that transfer payment should not become a part of national income. That the payment made as a relief allowance, pension, etc., do not contribute towards the current production. So they should be excluded from the national income, because here the pensions, those pensioners, those who are not contributing right now, because they have whatever the pension they are giving them, it's just a contribution in past. So this income cannot be included in the national income. But by mistake, if we are adding this income into the national income, then we cannot have the correct assessment. Then the self-consumption method. In developing country, a significant part of the output is not exchange for money in the market. It is either consumed directly by the producer or bartered for other goods. This unorganized and non-monetized sector makes the calculation of national income difficult. It's very difficulty because the self-consumption production of in developing countries is a very big issue. Then the price level changes. This is also a very important thing, that the national income is measured in money terms. The measuring of money itself does not remain stable. This means the national income can change without any change in the output. If there is a demonetization of, so if sometimes there is a de-evaluation of money, in that condition the national income is fluctuated, and because the same amount, but the value of that money is being reduced, or if it is like that, depend on the devaluation of the money. So all these things which we have completed our discussion. Now let us have a little bit. I have prepared a few questions for your help. So I'll send it to you. You go through them, and if you have any issue, you please ask. Now in next class we'll have a discussion on the public revenue. So any question from your side? Hello. Yes, Naresh, Harshita. If you have any query, you please ask. Aditya. Hello.
No, sir.
Not at all. Okay, I'll send this PPT for your further needful action. And if you don't have any query, and because I have to go for medical checkup, so right now I am closing this meeting, And thank you very much. We'll have a discussion in next class. Okay. Have a nice day.
Yes, sir.
Yeah,
Thank you,
thank
sir.
you.
Okay. Good day. So, good morning, everybody. Now, today I have decided to discuss with you regarding the public revenue. This is very important aspect of any organization or any government agency, any state or any country, because through revenue, whatever the way, the means they earn revenue, on the basis of that they can launch any new program, they can launch any new development program, or or they can even run whatever they are having in their kitty. So entire administrative operations, everything is based on the revenue which they have received from the public. So in this chapter, we will discuss regarding the meaning and concept of public revenue, and then the source generation of public revenue, how actually this revenue collected, or from which source actually this revenue is generated and be collected by the government. So we will discuss, this is very important aspect of any of any organization, even for any organization or for any body which is running any sort of that the social or economic activity. So in this aspect, the public revenue is the revenue which is solely governed by the which is received by the government agency. So government needs to perform various functions in the field of political, social, and economic activity, maximize social and economic welfare. In order to in order to in order to perform their duties, their functions, they required large amount of resources. They required large amount of resources. These resources are called public revenue, because resources only they can have, they can launch any plan, any sort of activity, they can launch any social activity, they can launch any developmental activity. So these resources public revenue. Public revenue in narrow sense, it includes only those source of income of the government which are described as revenue source. Wider sense, it includes all the income received government irrespective of the resources. So in wider sense, so we can say whatever the government will receive in the form of revenue, in the form of money or in the form of income, to whom we are calling revenue. So classification of public revenue. Now the revenue can be classified in among four categories. Number one, purchase revenue, then the commercial revenues, administrative revenue, and then the gift and grants. So these are four categories under which we can classify the public revenue. Taxes revenue are compulsory payment of to government without any expectation. For example, the income tax, for example, the production, example, whatever the taxes, even transport tax, all these are the taxes those who are being paid directly to the government, and they are supposed to be. If you want to go on a toll road, you are supposed to pay the toll tax. Those are the taxes. Those when the government collect revenue through the taxes, to whom we are calling the taxes revenue. Then commercial revenue received by the government in the form of price paid to the produce goods and services. Example, tuition fee paid to education institution. For example, the production tax, for example, the sale tax, all these are the commercial revenues, those who are being collected by the government, and they are deposited by the by the organizations or by the people, those who are activity of commercial nature. Then the administrative revenue received by the state by performing administrative function, for example, the fee, fine, penalty, etc. These all are the administrative revenue. For example, for any sort of that the banking activity, the bankers they are charging check check issuing fee, or like that, any fee which is, or any fee, if you have not deposited tax on time, then whatever the penalty is imposed by them, that is administrative, that in goes to the administrative hand, and we are calling it the revenue which is collected through the administrative means. Then gift and grant paid by one government to another government. For example, central government gave 50% grant on a particular activity or on a particular program, which if they are being launched by the state government, government can motivate the central government can motivate the state government to launch a program, and they can for that, 50% for 75% or like that. So these are the four categories under which we have divided the classified the public revenue. Now the source of public revenue actually from the source actually revenue came
Sir.
into the picture and being collected by the government. Yes. So the
सर
source the government earned
यस को
income.
ज्वाइन कर लो
Hello. हाँ यस क्वेश्चन
सर
ओके.
यस को ज्वाइन कर लो सर वो बोल रहा है ओके
अभी
सर
अभी करवाते हैं. Aditya Patel also. Yes. So now I think yes and Aditya both have joined the class. So anyway, I'll continue right now. Don't worry about that. So let us now once again come to the point that source of public revenue. Actually, what are the means and ways from which the government earns the income are classified into two categories: the tax revenue or non-tax. It means there are two categories under which we can have the classification further being classified the government revenue. Number one, the tax revenue. Then the second one is non-tax revenue. Tax revenue is the income that gained by government through taxation. Taxes are compulsory contribution levied by the state or for meeting expenses common interest of all citizens. Tax revenue can be classified among two categories: direct tax and indirect tax. Direct tax, they are the revenue actually those who are being collected by the government directly from the citizen of the country. For example, income tax, wealth tax, gift tax, etc. etc. These are the taxes those who are being collected by the directly from the not the citizens of that state or country. And the indirect taxes is the shifted of the payer to others. If the sale tax is imposed on the sugar, the producer or dealer it passes it on the next buyer or the burden is borne by the consumer. Example, sale tax. These are the taxes those who are indirectly being collected by the by the citizens, but those who use that facility, they are supposed to give the taxes. So because they are government directly collect from the producers or from the firms, those who are providing product or service, but these ultimately being passes to the ultimate user or consumer of that particular facility. So to whom we are calling the indirect taxes. Now tax revenue. So first one we discussed under which we have two categories: direct taxes and the indirect taxes. Now the non-tax revenue source. Non-tax revenue source of public revenue which are raised by the government from other tax in the economy, administrative revenues for fee, special assessment, fines and penalties. These are the three things are came under the category of the administrative revenue and to whom we are also calling the non-tax revenue source. Fee is the payment charged by the government to bear the cost of administrative service rendered in public service. Fee is not a voluntary; it is compulsory payment. For example, any sort of that you want to visit a particular organization, that there is a admission fee, there is an entrance fee. For example, these kind of fee they are compulsory and government collect the revenue through this. Then the special assessment, a compulsory contribution levied in proportion to the special benefit derived to defray the cost of special improvement of property undertaken in the public interest. Example, by the construction of roads, schools, etc., are going to yield some common benefit to the society. Because of this, the value of the rent or property may increase, so that the government can impose some levy on these special assessment to recover a part of expenses incurred. So these kind of that arrangement they are also being they came under the non-tax payment. Then the fines and the penalties. These are not an important source of public revenue. Fine punishment imposed for infringement of law. For example, if you have not wear the helmet, that the fine imposed by the traffic police. So these are kind of that things that if you have not deposited the timely not deposited the government revenue, then they are there. If you have not filed the income tax return, then there is a fine. So these kind of that the good thing, but these are not an important source of public revenue. They are also the source up to certain extent. The money is collected by the government by these means. Then the 40 forfeiters. It refers to the penalty imposed by court for the failure of individual to appear in the court. Forfeiters are also not important source of public revenue. Sometimes the people they are not abide with the law of the court, law of the land. Then the court sometimes impose the penalty on them, and that kind of that revenue is not that much of important. But this is also the part that the revenue being collected by the government by the non-tax means. Then the and cheats are the claim of the government to the property of a person who dies without having any legal heirs, without keeping a will. In such situation, all property of person, including bank balance and other properties, also passes to the government. Government become the custodial and they are the particular honor if the people have not given their will before they die. So in that case, the government also try to collect that entire the property, that bank balance and everything. So this is also the way that the government collects sometimes the money, but they are all three. They are not that much of important. For example, penalties, fines, forfeiters, and cheats are the claims. These all are the categories. That yes, of course, there is a contribution of these things in the revenue of the government, but they came under the category of the non-tax revenue. So today we have completed actually this revenue chapter, and I'll once again repeat that what are the objectives, meaning and concept of public revenue. Now we understood that for whatever the income government generate to run their show, to run their administrative entire entire activities and developmental activities, social activities. So for commencing all those activities, the 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 amount which government is required to whom we are calling the public revenue, and that revenue is collected by the government either by the tax or by the sometimes the non-tax means those we have already discussed. So now we understood that meaning and concept of this public revenue. Now what are the sources, from which sources the government collect the revenue? So these all things we have understood now. We learned these objectives, and once again I am giving the repetition of this thing, that what is the meaning of that public revenue, that that you know that the whatever the perform various function by the government in the political, social and economic activity of maximize social and economic welfare. In order to perform these duties and functions, government required large amount of resources, and these resources are called as a public revenue. So public revenue, in narrow sense, it includes only those source of income of government which are described as a revenue source. Wider sense, it includes income and receipt of government irrespective to the sources. So classification of public revenue: tax revenue, then the commercial revenue, then the administrative revenue, then the gift. These are the four categories under which the government have opportunity to earn the income, and all these came under the category of the public revenue. Now then, and the sources of public revenue, they are being divided among two categories: tax revenue, non-tax revenue. Tax revenue, we know that there are two ways: the direct tax and the indirect tax. Then we have a non-tax revenue, and in the under the non-tax revenue we have special assessment, fees, penalties. All these are these are very important, that aspect that through which the government collect the revenue. And then finally that we have fines, penalties, forfeitures, and sometimes the people die without the will, so that entire property transferred and reclaimed by the government. And these all are they are the non-tax, actually the way of collecting the revenue. So from my side, this all the today's that lecture is over. Now I'll have some multiple choice questions for your further understanding and better know how about this chapter. So now the first question, pick out the factor which is not feature of indirect tax. Out of which that four options we have: convenience, tax evasions is difficult, fair to the poor, powerful tool to economic policy. So the pick out the factor which is not a feature of indirect tax. So fair to the people. This is not the feature of indirect tax, because indirectly they are collecting the tax. So directly fair to the poor, which is not being considered over here. It's indirectly they are collecting. So that concept fair to the people, which is not applicable over here. Pick out the factor which is not demerit of indirect tax. Indirect tax, unjust to poor, inflationary in nature, a tool to economic policy, high administrative cost. So right answer is a tool to economic policy, because indirect tax, which is not the demerit of a tool to economic policy, and this is not the demerit of indirect tax. Then to pick out the characteristics which is not true in of indirect of direct tax. Encourages savings and investment. Direct tax, this is not encourages savings and investment. Then the pick out incorrect statement. In the short period, shifting of a tax is easy. In the long period, shifting of tax is easy. When supply is elastic, shifting is easy. None of the above. So first one, in the short period, shifting of tax is easy. Pick out the tax which is not a part of indirect tax. Excise duty, sale tax, entertainment tax, all these are the direct tax actually, but the corporate tax is not the indirect tax, because it imposes on the organization. So corporate tax is the indirect tax. Impact of tax refers to final money burden, immediate money burden, indirect real burden, and none of the above. So immediate money burden, that and when we tax, it it impact on the in immediate money burden. So these are few things which we have discussed in this chapter. Now, if you have any question, you please ask. Yes, Nitesh, do you have any question?
No, sir.
Not at all. Okay, Yash, Vishal, Amit, Aditya, anybody, if you have any query regarding this public revenue, you please ask. Because it's a very simple thing that whatever the ways and means, the resources, the government, they are earning their income, and they are managing themselves, and they are managing all the policies, all the activities those they have decided as their agenda while they came into the government. So all these things they do whatever the ways and means, they allocate the budgets. So these all, for allocating budgets, they require the income. So that income is being called as a public revenue, because this government, they don't have anything they are collecting everything from the public, this way or that way, directly, indirectly, or sometimes the non-tax means. So all that we are calling the public revenue, and all these things are very important as far as the public revenue is concerned, and as far as the activity, those who are being governed by the government, all these things are very important. Yes, any question, anybody, if you have.
No,
So
sir.
not at all. Okay, no problem. I think because of that, sometimes it's a net problem. We are not able to understood the right thing on time. So anyway, if you don't have any